Lovely listeners, welcome to another episode of It's No Secret. This week, we've got some exciting major updates from the Kernel team.
Hot off the press.
Exactly. And that is the launch of Shares and ETFs, which is a new product designed to complement our core funds offering, giving you even more ways to build your wealth.
Exactly. And in keeping with this, Tim, I have to say I'm drinking a La Croix, which I'm really like channeling my inner investment broker, Wall Street bro vibes.
You just need the best.
Yeah, which feels like really in keeping for this whole episode. So yeah, exciting news.
Yeah, very exciting news. All right, so Kat, kick us off. What's new at Kernel?
Oh, great question. So as you said, this week we have launched Shares and ETFs to all our customers on the platform alongside funds, Kiwis and savings products with Kernel. And I think, for many of our OG listeners, OG investors, they'll know that since 2019, we've had a really strong, clear investment philosophy around the fact that low cost, data driven, like consistent wealth building is really the way to success when it comes to managing your money and managing your wealth. And also really relying on data, not doing things that are flashy, not things that are like the big next thing or the hot ticket. It's really about focusing on, high quality diversified index funds.
Yep.
But of course we've kind of expanded from that. In a period of time. Yeah.
100%.
We're coming up to 6 years this year. And over the last 6 years, we have, grown our fund range to 24, 27?
25.
25.
Yeah.
We always get confused because of the hedged, unhedged versions. But, roughly 25 funds, including some actively managed funds. Yep. We have savings accounts and we have a KiwiSaver scheme. And the launch of Shares and ETFs is really taking us one step further to being closer to our mission in terms of, I guess, creating a world where Kiwis are wealthier, more financially capable, literate, and there's really great savings and investing behaviours. So this for us is a big deal.
Oh, yeah, exactly, right? So, and that brings us perfectly into why shares and ETFs, Kat? Out of all the things that we could have done, why shares and ETFs?
Good question. So I guess, we do have in the cohort of our customer base some diehard index fund investors. I would put myself in that category. We've obviously talked about that on the show before in terms of, I personally don't have a lot of interest in managing individual company holdings or buying into shares just because it's not where my interest lies. But that's not to say that I am the same as everybody.
100%.
Probably, well, I know I'm not the same as you, Tim. You do have shares. You've been in our beta group for direct, shares and ETFs for a really long time. So I'm not representative of everybody. And over the past 5 years, we have often had requests from our customers, either existing or new, saying, hey, do you guys offer shares? Can I buy shares on your platform? Because 46% of our customer base have told us that they have shares or ETFs outside of their Kernel holdings on a different platform. We have been really big proponents since day one about core satellite investing. We've talked about that on the show a lot in the past as 100%. Well. And I actually did a quick Google early today because I wanted to send someone an article that explains core satellite investing. And so I did a quick Google of like core satellite Kernel, and 5 different blogs came up where we really reference how that works and how, you piece funds together with other investment options. We often talk about our little running joke of like investing is not religion. You can have a bit of everything. You don't need to stick to one method, one philosophy. And so the iteration of Kernel to include shares and ETFs has really come from that customer demand, the fact that we just know people do want to have satellite or outside holdings from funds, but we also are really passionate about giving people the ability to manage their money in one place. So, those customers that told us that they're running multiple platforms, in some instances, they have the majority of their kind of longer term investing with us, whether that be through funds or KiwiSaver, but then they often have up to another 2 platforms elsewhere to hold, maybe some ETFs somewhere and some shares somewhere else. And that's a lot. We have talked about that kind of mental overhead of, managing multiple things. And so the ability for a customer with Kernel to say, have their KiwiSaver and then also be able to go and buy some Apple or some Google shares within the platform, all within New Zealand dollars, and see that all together was a really powerful proposition for us. Something we thought people would love. I mean, I would love that if I did want to buy shares. I just don't.
And there's yeah, it makes it so much easier having everything in one place, right?
Yep.
Like I like the fact that I can just see my Kiwis, like even a savings account in there as well. And
yes,
cool, that's my big pot of money. I don't have to do the mental math of like, okay, I have some things here, I have some things there, and it's just like, okay, cool.
And what am I doing with what?
Yeah.
And maybe having a different approach to one account than another, and needing to check in at different times.
Yeah,
it just removes all of that burden.
And just one password, especially.
I mean, yes, look, reducing like 3 passwords down to 1 is a significant benefit.
Well, there is a lot of people that I know that just use the one password, and that's a huge security risk, obviously.
Yes.
But hey, that's another conversation for another day.
Exactly.
And going off the whole core satellite piece, we've already also touched on that a little bit with the funds that we have already, right?
Yep.
So we already have clean energy, moonshots,
Sure.
EVs, and that kind of thing. So that's kind of foreshadowing a little bit of that and giving more people control, right?
Yeah,
so
absolutely. Absolutely. I mean, and core satellite comes in many different forms for different people. It's can be something where, you're either doing that in a fund space. So you have, your core in a well-diversified global fund, let's say the Global 100 or Global ESG. And then you do have some allocations to specific asset classes or specific types of funds. And that might be green property, that might be infrastructure, as you say, that might be clean energy. But then you could also have satellite allocations to things like Bitcoin, alternative assets, direct shares, ETFs that we don't have as an index strategy. That was another piece. We, did hear from customers that some of the ETFs that they held externally to Kernel were so that they could gain access to an index strategy that we don't offer.
Yeah.
And we've also been quite open about the fact that we're not here to launch 100 different funds. We're not going to cover every fund under the sun in the same way that, say, Vanguard does. We do want to have a select core range of funds that a customer can build a whole portfolio or strategy with if they want to. But if they want to access things that say, there is a Bitcoin ETF, for example, or there are some thematic ETFs that we're just not going to offer.
Yeah. Oh, exactly. And yeah, so this brings us pretty much to how does it work? So yeah.
How does it work?
How does it work?
Great question, Tim. So, I mean, if you're an existing customer of Kernel this week, you will already have access to shares and ETFs on the platform. So it's quite literally as simple as logging into your Kernel dashboard. You'll see a new tab in your top menu that says shares and ETFs, and you can click into that. You will need to do a little bit of onboarding because you're onboarding to our US broker partner called Alpaca Securities. So you need to answer a couple of questions. Takes about a minute to basically be registered with them in their US system. And once you are in and have access to that feature, you can browse through a number of shares and a number of ETFs. So one thing, I guess, that's a little bit different, because I can tell you're going to ask me, Tim, about Kernel's offering is we have very purposefully made the product to reduce, I guess, that overhead burden of customers trying to sort through thousands of companies and really offer a range of shares and ETFs that has the same type of philosophy as our range of funds, which is curated and focused on, I guess, a core offering. So a select range of shares, which at the current time means just over 500 of the largest companies that are on the S&P 500 or the US 500, and then a range of just over 300 ETFs from Vanguard, Invesco, and SPDR.
Nice.
Yeah.
Nice. A good caveat to that actually as well in the ETFs piece. Just because it's US listed doesn't mean the investments in the ETFs are just
only the US. Yeah,
Yep.
exactly. So I guess the beautiful piece of those ETF providers is that collectively they manage over $7 trillion of assets between the three of them, and they provide access to many, many different types of markets. So you could be investing in a Europe specific ETF. You could be investing in parts of Asia.
Yep.
Just because it's listed on the US exchange, as you note, doesn't mean it's solely investing in US assets.
Nice. And tell us about the currency conversions, Kat. What's happening there?
Great question. So another core difference, I guess, on our offering is that we have made the choice to enable customers to trade and view their portfolio solely within New Zealand dollars. So traditionally, if you're investing in a foreign market on other platforms, you would be looking at buying in a foreign currency, which means you need to practically transfer money from your New Zealand bank account to a New Zealand wallet within that platform, then do the currency exchange yourself and transfer it into a foreign currency wallet. And from that foreign currency wallet, then go and buy holdings,
Nice. Yep.
obviously in whatever foreign market you're investing in. Now, that, there's no like particular downside to that, but from a point of view, I guess, as a like Kiwi investor, take it back to like, what's the ultimate goal of your investments? I'm going to make some grand assumptions that for most people, it is to use the money or the income from that money for a goal in New Zealand or to help like supplement their retirement. So ultimately, you're going to need that money within your home currency. You're going to need it in New Zealand dollars. So really what is most impactful for you is understanding how that money is growing and fitting in your total New Zealand dollar pot, which your funds and KiwiSaver already are. And given we really believe in the ethos of having your money kind of in one place that make it easy to manage, we felt that it was also really important to have it within one currency. So when you buy shares or ETFs with Kernel, you have your Kernel New Zealand dollar wallet, which you already have, and you are then going to buy straight into the US market using those NZDs. So there is obviously currency exchange in the background because with our Packer, our US broker, you will be buying in US dollars, but we are doing the currency conversion on your behalf. There is a fee, and we'll obviously chat a little bit more about fees, but there is a fee for currency conversion, but ultimately you're able to see exactly what in New Zealand dollars you have bought and what your holdings and performance is in New Zealand dollars ongoing.
Right. Yeah. So to reiterate, there's no wallet separate to the wallet that you have. No,
you're going straight from your Kernel wallet that you've already got in the same way that you buy into funds or transfer money into your savings account from your Kernel wallet. The money there would go straight into the US market to actually buy shares or ETFs that you have, and shares or ETFs that are paying out dividends will have that money paid back into your New Zealand dollar wallet in NZD.
Yeah, and that exact same thing when you sell out, right? It goes straight into your wallet, New Zealand dollars.
In New
Don't
Zealand
have to
dollars.
worry about the currency at any point in time.
Exactly.
Good to go.
Yeah, exactly right.
Nice. Okay.
Yeah. So a few less steps, I think, from a practical investor point of view, right? Like a few less steps that you actually have to action on the platform compared to, say, other platform offerings.
Yeah, and there's like a bit of a advantage there, right? You don't have to think about like, oh, well, you shouldn't be anyway, about the Forex market.
No. Yeah. And so I think this also probably speaks to our ethos a little bit. You know, when we started brainstorming what this product would look like in the context of Kernel, you know, the kind of internal tagline that we were using was trading for investors, not trading for traders. And we've really built a lot of the functionality that is in shares and ETFs around that philosophy. And that's because we do acknowledge that people want to sometimes hold ETFs or shares outside of a fund. But ultimately, we still strongly believe in a long-term investment philosophy and the idea that you're buying into any investment for, you know, a solid reason. And the reality is, if you're buying into an equity investment, that is long term. You know, that is not something that is day trading or, you know, looking for a short term gain or short term profit within the year. That is something that ultimately you want to buy and hold or continue to invest in for 5, 10, 15, 20 plus years. And so with that, we feel like the focus as an investor should be on making decisions around what companies and what ETFs are you buying, as opposed to also factoring in what's the currency doing? What's the US versus NZD? Like that is a very, very hard space to play in. And, you know, something that we just think should not be a strong part of the consideration set when deciding to invest in the US share market for the long term.
Nice. And that kind of brings us to the whole limit orders versus market orders conversation, right? So just to clarify for those that don't really know, market orders are...
I love that you're just asking me,
Tim.
Tim.
I was going to ask you.
So market orders are basically that you load a order into the system, whether it be during market open or outside of market open, so when the market's closed, and that order just goes straight into the market at the market price that's on offer at the time it's processed. So if, say, you... put an order through in New Zealand business hours when the US market is closed, you won't be setting the price. You won't know what price at which you're buying, say, those Apple shares, but you will know how much money you're investing in Apple. So you might be investing $10,000 in Apple. That order will then sit there and be pending until such time that the US market opens. And when it does open, it'll be filled based on the market price at that point in time. So that speaks a little bit to, again, that kind of longer term philosophy of whether you're buying in at $3 or $3.15 shouldn't ultimately be super impactful for you if you're planning to hold that investment for 10, 15, 20 years. Yeah.
100%.
Whereas limit orders are essentially the opposite, which is basically giving a investor the ability, but then also, if I'm quite honest, the responsibility to decide exactly what they should be paying for that share. Yep. So that is giving, an investor the ability to say, I don't want to buy at $3.15. I only want to buy it at $3.05.
Yep.
And so they set a price at which they would buy that share. Now, there are some people that will really want to do that. And I'd probably say that they're possibly not the customers that ultimately our service is aiming to fulfill.
Yep.
Because you can't do that within a fund. Yeah. And so, if you're investing into, say, an index fund, one of the Kernel funds, Global 100, you're not picking the price at which you're buying that. Yeah. You're buying into the philosophy that you want to invest in the Global 100. You want to invest in those markets. You want to invest in those sectors, and you want to invest for the long term because it aligns to your goal. So by only offering market orders and not limit orders, we would really like to encourage people to focus on the same type of philosophy, which is, I have decided that I believe in X company and I believe in its future for the next 5, 10, 15, whatever period of time that is, years, and ultimately that's going to grow. And so buying at $3, $3.05 or $3.15 to me right now is somewhat irrelevant because I'm hoping that share price will grow to $10.
Nice. And you touched on it a little bit as well, the whole trading situation. Can you track these things in real time, or how does it work compared to funds?
Oh, great question. So the information is a little bit more real time than funds. I don't want to say that it's 100% real time because I think the reality for most of our customers, and certainly what we've seen from our customers that have already had access to this product, is that they're placing orders or trades during New Zealand business hours or kind of our waking hours. And that's generally when US markets are not open. Yep. So what is updating during that time is the FX rate. So you will always be getting a fairly realistic indication given where facilitating you buying in New Zealand dollars, you'll get a fairly, real-time indication of where the USD NZD currency is currently sitting. But if I placed an order, at midday, the system will be showing the closing market price of that share for the day prior.
Okay.
Yeah.
Nice. That makes sense. Okay, cool.
Yeah.
So I'm sold, Kat.
That was so easy, Tim. I feel like, okay, you've got another question, which is probably tax, because everybody's going to ask.
Yes, I did have that at the very bottom,
okay,
which we can touch on now since you've already brought it up. So how does it work with tax? Because obviously shares and ETFs are quite different. And we've talked about this before in the past as well, right?
We have. And for anyone that really wants to get into the detail, we have a very detailed tax paper that talks about all different types of investment structures that you could own from New Zealand as a New Zealand investor, and explains what your tax outcome would be based on your PIR rate or your RWT rate. So definitely go and have a read of that, because as we've always said, tax and investment choices are very personal, very dependent on your own situation. There will be some people where investing in shares and ETFs on the US listed market is more beneficial for them from a tax point of view than investing in funds. So people that are familiar with the US share market and being an investor in the US share market from New Zealand will probably be aware of the FIF tax rules. There is a threshold that if you are investing directly less than 50,000 New Zealand dollars, you don't need to pay FIF tax. So where this can be beneficial is if you are an investor that has a smaller balance portfolio and you just want to buy into, one particular company or one particular ETF. Where this then tends to vary is if you are above the fifth threshold of 50,000. So let's say you have a investment portfolio of $200,000 and you are a high RWT rate person, or you are a child or a charitable entity or a trust or a company that has different tax, you possibly want to be looking more towards a PI fund. So the Kernel funds are all PI funds. Shares and ETFs are not at all. So shares and ETFs will be subject to FIF tax. We've got a lot of FAQs and tools coming out to help people manage this. And for those that are on our plus or premium plans, coming into the end of this current financial year tax, we will have some support in terms of reporting to help make that a lot easier for customers to do.
Very good. Very good.
Yeah.
And speaking of the plans that you just mentioned,
yes,
talk to us about the pricing.
Pricing, great. So in terms of shares and ETFs specifically, we have one very simple kind of headline price across that product, which is the foreign exchange fee, so the FX fee. So people that have bought shares and ETFs before will probably be familiar that the types of fees that you could be charged on other platforms or with brokers might be a transaction fee, brokerage fee, similar kind of thing, an FX fee to buy that foreign currency. There might be custody fees depending on what type of broker you're with to just hold that share there or that ETF there. We have really simplified it down because I guess the reason is that it's really hard to do the mental math to compare. And oftentimes we find, particularly with some of our competitors, they tend to hide the FX fees. They lead with, say, the headline brokerage fee and then hide the FX fee. Or a lot of other platforms on the market have their trade fees in US dollars. So as an example, Hatch have their trade fees as $3, but it's $3 US dollars. So, if you think about every time you trade, the exchange rate is different.
I was going to say that. Yeah.
And so I don't know how many people are really doing the mental calculations to be like, well, what am I actually paying today in New Zealand dollars? And then what am I paying when I also include the FX? So we have opted to go down the path of just having an FX fee. The highest FX fee that one could pay on our platform based on the tiers that they're on is 1.5%. Now, if you want to reduce that FX fee, you have the option to subscribe to a plan. Now, having a plan gives you access to things outside of just better FX pricing for shares and ETFs. It does give you access to other features on the Kernel platform that also benefit other products like invest or reporting or account types or account linking.
Nice.
So there is a little bit more to the plans. You can go and see all the plans on our pricing page on the website. But what it does mean is that if you're on a core plan, which is our base level plan, which is free. If you are in that plan and you are buying shares and ETFs, you'll be charged 1.5% FX on a buy or a sell. If you are on our plus plan, which is $5 per month, currently also on a special annual sale. If you get in quick, you get a discount for signing up for 12 months. The FX on shares and ETFs reduces to 0.6. And if you are on a premium plan, which is $15 per month, again, also on a large discount at the moment for an annual plan, the FX on shares and ETFs for premium customers reduces to 0.4%. Now, how this compares to, say, some headline fees. So comparing to Sharesies, across all their plans and kind of, various monthly fees, the FX fee is 0.5%. So you'll always be paying 0.5% to convert money from your New Zealand wallet to the US wallet within Sharesies. And then your trade fee or your brokerage varies based on what plan with them you have. So you are paying FX and you are paying a brokerage or trade fee. And the maximum that can go up to is 1.9% as a trade fee on a pay-as-you-go plan, in addition to the 0.5 FX fee that you've already paid. Now, Hatch has a combination of fixed and percentage. So they also have a 0.5% FX fee. But as we said, they've got generally a $3 USD per trade fee. Stake have a similar fee structure, although their FX fee is higher. It's 1% with a $3 USD per trade fee. And then there's other providers like Superhero or Tiger Brokers, which again, all do charge FX and some kind of trade fee or brokerage fee. So really, I guess our primary difference is we're just charging FX fees. There is no trade fee specifically associated with shares and ETFs. And if you would like to be able to access lower FX rates, you need to be signed up to a plus or premium plan.
Nice. And that's a good rule of thumb there. If you're investing more, you probably could consider looking at the bigger
plans.
Yep.
Exactly. Yeah. So, I mean, I think as we've always kind of said to people, like think about what your investment behavior is going to be in the moment in which you're deciding to either like switch from another platform or start investing in shares and ETFs altogether, and think about what you might generally invest over the next 12 months and then decide the plan for you.
Yep.
You know, the nice thing about plans, particularly being on a monthly option, is the reality is, let's say I had a large amount of money that I wanted to invest, let's say somewhere in the hundreds of thousands. I probably want to be able to lock in a low FX fee. I might just subscribe to one of the plus or premium plans for 1 month, make my big trade, and then I can downgrade because I plan to just hold and kind of keep that money there invested. Whereas if I'm an investor that's, say, investing like $250 a month from my pay, I potentially don't want to be on a plus or premium plan because that doesn't make sense for me from like the fixed plan point of view, in addition to the reduced FX.
Nice.
So if people want a bit of help with this, our customer service team is more than happy to kind of give you an indication of, chat us through, like we can help you just do the math. So do reach out.
Yeah, I was trying to write a blog on this and I was just like, oh my goodness. Everyone's so unique in their pricing.
It is. And that's why I think it's like the first place, because people will say, well, who's the cheapest? Who's the best? Who do I go with? And it's like, there's no right answer to that.
Yes.
Sharesies has a place, Hatch has a place, Kernel will have a place, Stake will have a place, Tiger Brokers will have a place. You really need to think about what is your investor behavior, what does your portfolio and your behavior with that portfolio look like?
Yes.
Is it important to you that you can manage multiple different types of assets within one platform? Because if there is, or if that is important, it's also okay to pay a premium for that.
Yeah.
I think there are some people that will just look for the lowest possible cost in any one thing, and they're happy to maybe
juggle 10 different accounts.
Exactly. And if that's you, that's also fine. But if you're also the person that's like, you know what, I'm happy to pay, middle of the range or on par with where I'm currently, so that I can have the ease of managing everything together, then that's also a really great reason to consider it.
Oh. Nice. Yeah. Okay. So different strokes for different folks, that kind of thing. Yeah,
exactly. Which is probably also a good point or place to point out that we do know that this product will not be for everybody in the Kernel customer base or the future customer base, and that's also totally fine. Just because we now offer shares and ETFs doesn't mean that anything has changed with like our core range of funds or our core Kiwis saver.
Or our ethos for that matter.
Exactly. Or the ethos. This is something that is available to those people should they want to use it. And if people don't want to use it, then that's absolutely A-okay. Also probably important to note that it's only available within the investment suite. It's not part of KiwiSaver.
Yeah.
So this is shares and ETFs owned personally as an investment. It's not part of our overall KiwiSaver plan.
And it's not in joints, trusts, or kids'
companies
accounts.
Or kids' accounts.
Right. Yep.
So there are a couple of limitations in terms of the account structures. At the moment, it's only available for customers who have an account within an individual name. And, if we had customers that really wanted this and they had a joint account, then, opening a second individual account would be totally fine.
Nice. Cool. So we've talked a little bit about the core satellite investing piece.
Yes.
Can you kind of give us a practical example of how this could look like? Let's say you've got your
Great
investments.
question, Tim.
You've got your investment funds at Kernel.
Yes.
You kind of want to dip your toe into shares and ETFs.
I will.
How could you do this?
Okay, so I guess the core satellite general ethos, if we want to put numbers at it, is that 70 to 80% of your total investable wealth should be in your core. Now, your core might include your KiwiSaver, might include funds outside of KiwiSaver, and that should be low cost, really well diversified, very easy to manage, and pretty hands off. So index funds fit pretty perfectly in that. Now, there gives you somewhere between 20 and 30% to play with in a satellite piece. Now, for some people, that'll be too much. I probably wouldn't have a 20% allocation to a satellite. Me personally, I'd probably have somewhere closer to like a 5 to 10.
Yeah, that's great.
So let's say, I had, or the average Kernel customer at the moment has roughly $40,000 invested in their investment account. So if that is 80%, then, you're looking at somewhere between like $8,000 to $12,000 roughly if you had that to be invested in ETFs or individual companies.
Nice.
Now, and that's if you want to. So it would be that kind of piece. The other thing I guess that you could kind of take note of is people that love index funds often then also love or hate particular companies within those index funds. And so we do get the feedback that there are a lot of customers that really believe in the ethos of index fund investing, but they potentially want to like overinvest in certain types of companies.
Yes.
And you can't obviously do that within an index fund because it's not varying outside the rule. So having the option to invest in those companies directly, in addition to the holding that you might already have within a fund, is also potentially something that I think would be appealing.
Oh, very nice.
Or
very
a good
nice.
way to implement core satellite.
Oh, exactly. Yeah. Exactly. And going back to the whole pricing plans, that kind of comes with some nice little features and benefits the line, right?
Yeah, that's right. So I guess we have launched pricing plans generally for the platform. They're not specifically related to direct, but they have been launched at the same time that we have launched shares and ETFs, because there is variable pricing, as we've mentioned, on the FX fee for shares and ETFs based on what plan you're on. Now, going forward, there will be more and more features and benefits that roll out across the various different plans based on the customers that we suspect will fall into each of those types of plans, and also based on the fee that they're paying to be in those plans. Yeah. So for all of our existing Kernel customers right now, the most important thing to understand is that you are defaulting into the core. There is no change to pricing on KiwiSaver. There is no change to pricing on Kernel funds. There's no changing to pricing on Kernel Save. You are able to have access to all the products that you've had access to for the last 5.5 years. At no additional fee.
Nice. And
you also have access to shares and ETFs if you want to at the 1.5% FX fee. Yep. If you then want to get access to shares and ETFs at a discounted FX fee, or if you want to start to get access to different platform features or tech features, you will need to look at upgrading to a plus or a premium plan. So there's a few things on the website. I would encourage people to go and have a look because there's a few additional features coming soon into Plus and Premium. And there will be more and more that comes out over the next kind of 6 to 12 months in terms of things that will be available. But as we have, I guess, the easiest way to sum it up is to think about the core plan as just a really easy way to grow your wealth with the core financial products that Kernel offers. Plus is the plan for families in particular, or our lovely family CFOs, to manage their wealth with flexible account structuring and slightly different fees on certain things. And premium is really for entity accounts or larger investors, particularly those larger investors that plan to invest larger amounts into shares and ETFs at the get-go. Yeah, so more to come on that. I know there will be some product updates coming from Armin, our head of product, in terms of what's kind of on the roadmap for each of those things, but really do encourage any existing customers to reach out and talk to us about what might be suitable for them, or what they can look forward to in each of those plans.
Oh, very nice. Some exciting times coming.
Yeah. Lots of work to be done. That's the underlying message for the team. Still lots of stuff to be built, still lots of things to be delivered.
But it's coming.
But it is coming, and we're very excited.
Oh, exactly. Nice. And on that note, big thanks to Kernel for enabling us to do what we do. Don't forget to hit like and subscribe wherever you're tuning in, whether that's video on YouTube or listening to Spotify or Apple Podcasts. If you have any questions, feel free to get in touch. Send us episode requests, feedback, and more. All right. See you later.
See you.